This is Eric Mwab with Mother.com with about 30 seconds to go before the close of the week, the first week of October 2019. Market showing a good recovery after being down most of the week, having a nice bounce over the last 2 days. There's the close. So let's take a look at the weekly charts. But before we do that, quick look at the closing numbers. So as the market is settling out, and we can see that if we take this weekly closing low here from late 2018 and this weekly closing low here, we get a nice trend line, as you can see. And what is curious here is we spent a lot of the week below the blue line, but as of Friday, the market has recovered and is trading above the trend line. So net, Friday's recovery has stabilized the market, and this should be good for bulls. And now we can say that at least we are, at the very worst, the market should be trading in this range where it's been trading over the last couple of weeks. So a nice recovery, and also we can see a good bounce off the 34-week moving average. Nice bounce off the 34-week moving average. So yes, we got that pullback during the week. But is the market broken? No. According to Friday's recovery, the market has corrected most of the things that were broken in terms of the charts. And so we can say net, the market has gone back to being stable, to potentially even back to testing recent highs. Now, one of the reasons why we can see that the market is stabilizing is on the daily. Now we see this sharp recovery on Friday, and it is consistent with the following lines as far as the RSI is concerned. Oh, by the way, we came very close to that 200-day moving average, and as we can see, the market bounced off that area. This is good. That's exactly what the bulls want to see during a pullback, testing the 200-day moving average, similar to this period here where we bounced back above the 200-day moving average, bounced back above the 200-day moving average. So again, net, as far as the daily chart, this is a stabilizing effect, and the market should be stable around here. It's only when we start breaking below the 200-day moving average at some point, a break below the 200-day moving average would be more serious. Now, to the lines I was discussing, if we take a look at the RSI from a daily chart perspective and draw a line connecting this RSI low and this RSI low, and we extend that, something like that, you can see how it gives us this intraday low with a reversal back above the line for the daily closing low there. And now we've kissed that line and we've bounced off the line. That is what the bulls wanted to see. So daily charts looking good. I would say for reference point down the road, whenever, if and when the market breaks below that line, that would be a more serious break. As of Friday's action, this is good enough for a market recovery. And then we can see, based on the uniformity, take this line here. Let me change colors a little bit. So this line here, which gave us, on hindsight, movement of the lows of late 2018. So off the lows here, this price movement corresponds with this RSI action right there. So we take that area of the RSI and draw what I call a uniformity line. Anytime you bounce on this line with uniform action, it tends to give us a good scenario as to what could happen next. And we can see here a series of bounces, number 1 and number 2. Ultimately, we recapture the area back above the line, which is this area, and the market does go on a nice run, as you can see here. It would come and move above, below the line and back above it here for the lows there. Again, we tag the line here and here for this daily closing lows here and here. Ultimately, the market did go to attempt a new breakout. So right now, what I'm trying to show is that we've bounced on the same area, and now we see the market coiling up in terms of the RSI and prices reflecting movement to the upside. So it does bring now this stabilizing effect, and as long as we are trading above these two lines on the RSI, line number 1 and line number 2, this market should continue being stable to bullish. Now that concludes the free portion of this video. The rest of the video is for paid Muathe.com subscribers. Now if we go back to the weekly chart, one of the things that I did not mention, and I think it's one of those things that is going to determine where we go from here, is this line here was not broken. And that's a big deal, because the market held above this line. And also keep in mind, at some point when the market was trading here during the week, the RSI was trading below 50. And you can see that by the end of this week, we recaptured the area above 50. This is good as far as stabilizing the market. And more so, if the market, the S&P 500, can now coil up, that's good. What that would suggest, if we coil up on the weekly RSI, is that now we might even have to go back and test recent highs. Remember, we know this to be one of the market's characteristics, because when we bounce above RSI 50, we tend to go back to test previous highs. This is just how the market responds to support around RSI 50, as we see here. Same thing here, we held the 50. We would go on to test previous highs and actually improved on those highs. Same thing here. The market would go to test previous highs and actually improved on them. So the weekly chart and the daily charts are showing that the market is absolutely doing exactly what the bulls want to see after a strong couple of days to the downside. Now, remember, this is a little bit on the tricky side, because on the monthly, as long as we are down for the month, this remains net a market that has high probability of seeing a massive plunge in the months ahead. Remember, not necessarily day to day or week to week, but as long as we are down for the month, and as long as we are showing resistance on this level here on the RSI, as long as we are showing resistance on that level, this is a big deal. And again, let me spend 2 seconds on this. We've been talking about this for many months, if not for a couple years now, actually, if I think about it. But it is this line here. And you can see for 2019, this line has become a problem. Market's been unable to clear this line. And for those who are new, this line is critical. It so happens to also be around the 61.8 on the monthly chart there. And also, if we take a look at where we broke down in 2000 and also in 2007, it lines up nicely with that area. And we can see areas of uniform activity rejection for the highs there of 2011. If we go backwards, we can see an area of uniform activity support here in 1998. The uniform activity support back above the red line was a buy signal. Notice how the market would go on to record substantially improved highs after that. Would go here and we went higher. So this line is legit. And most recently, it gave us this nice entry coming into 2016, late 2016, going into 2017, before this very strong market move, this area here. So what happens here on the monthly is a big deal. As long as we are down for the month, this is still, on a long-term picture, very bearish. Now, what could change and give the market momentum would be if the market can clear and move above that red line. If it can, then we should see the market testing recent highs. So the monthly charts remain suspect. Dailies and weeklies are showing a ton of improvement, and that's exactly what the bulls wanted to see. So net, we can still play breakouts based on the daily and the weekly chart. And if the daily and the weeklies break down, then that's different. But for now, we are seeing support where we need support on the weekly and the daily. We can turn absolutely bullish when the market turns positive for the month. If we take a look at the 2 hourly, and again, we shouldn't put too much emphasis on this, but we can see potential for beginning the week with a little bit of a pullback if these two lines hold. We got this back test line that is in play now, and we also have the top side resistance line. Again, in my personal opinion, we shouldn't put too much emphasis on the small time frame, especially if you're trading days and weeks into the future, because this is too small of a time frame in my opinion. The big picture is going to determine the main trend, the weeklies, the monthlies, and a little bit of the daily. But right now on the 2 hourly, we can see that we are coming back to this potential area of resistance. If the market clears these two lines, then expect the beginning of the week to be to the upside. A quick look at the VIX daily, and we can see if we go back to the break here, this trend line break as an example on the daily for the VIX, we see that this week we did get rejected exactly on this line right there. So as long as the VIX is struggling to break out, the general market should be stable. If you go back to these periods where we have either rejection or uniform activity turnaround back below the red line, these were areas where the general market would recover. We try to move above this red line here. Eventually we form like a V-type inverted V back below that line, and then again we are rejected here. All these periods the market was generally recovering and the market would move higher. So right now, just based on the daily, it does suggest that the VIX is struggling, which means the general market has the bias and the strength. Now we can also take a look at the weekly chart, and we can see that if we take the RSI topside and draw it as such, something like that, we can see it connects nicely with the highs here, touches that high close to this one, and you can see above the line back below it for the highs there. And as of this close, Friday's close, this is turning into resistance. So what I would actually even do here is take this recent weekly closing high at 19.87, and as long as the VIX is trading below this number, then the market should be stable to bullish, the general market that is. At some point, if the VIX is to break out above 19.87, that would suggest a market under downside pressure. And also, as long as we see this resistance line, that remains to be suggestive of a VIX that is moving lower and a market that is more than likely poised to go higher. If the VIX was to clear this topside resistance line on the weekly, that would be a major change, and that would be bullish for the VIX, bearish for the general market. So net, the VIX is pointing down, which means the market is bullish to stable. A quick look at other markets, and we're pretty much going to arrive at the same type of conclusion. Again, a lot of markets worldwide pretty much have been a reflection of each other. We can see at the highs, recent highs, Canadian market had come back to test the top side of that line. And as of this week, just like the S&P 500, the RSI lows line pretty much has held. And you can see we've come back to that exact area. We are holding above the RSI 50. So net, as long as we are holding above this lows line, then the market should be stable as far as the Canadian market is concerned. And again, pretty much similar to what the S&P 500 looks like. If we take this weekly closing low and this weekly closing low, just like we saw with the SPX, we see that we get a trend line something like that. And we closed pretty much around that trend line. So net, it is hard to be extremely bearish when it looks like this. Quick look at the daily, and we just take a quick look at one line, which is a simple RSI lows line. And market is very aware of these lines. It comes and finds support exactly where it needs to. So as long as we are above the RSI lows line on the daily, the Canadian market should also be stable. And of course, this is what's making it complicated, is the monthly chart continues to be very bearish. And again, it's the same thing, same conclusion as with the S&P 500. There's no need to overkill this, but we can see that it's pretty much looking bearish on the monthly chart. And we can see the same thing if we take a look at the long-term picture. So take this resistance line around the 61.8 level. One of the areas here that has been a problem, and we can see actually coincides nicely with one of the biggest drop zones. Of course, that was in 2008. Huge drop here, and we can see that corresponds with this break point, coinciding with the red line. And even when it has been a nice area to go along, this double bottom support here, you can see the major lows there before you go into a big advance. So in other words, this line has been very instrumental. And just to give you, again, we can see areas where there was struggle, uniform activity above the line, back below it for these highs there. So whatever happens around here on the monthly, just like we saw with the S&P 500, as long as the Canadian market is down for the month, this monthly chart continues to be very bearish. Of course, best case scenario is movement above this red line. That would be bullish. And keep in mind, just like we saw with the SPX, this is around RSI 61.8. A quick look at the Nifty, and we can see that this is a level to watch, the recent monthly closing low. Of course, bulls would not want this level to be broken. So I'll give you the number to watch there for those who trade that market. That is at 11,023.25. And for the Bank Nifty, let me give you that number. It's a little bit nifty. That number is at 427.85. Again, you don't want to break these numbers to the downside because of where the RSI and MACDs are trading. We can see that both the Nifty and the Bank Nifty have a possibility, or are too close or close enough to this area here, where that will be a movement to fresh 3-year lows, also movement below RSI 50, and also would suggest that we would be pushing the MACDs to 3-year lows, and also the probability of moving below zero. So those are the bearish situations. Otherwise, if the market can bounce and hold above the price levels discussed, then this would still be a market that will be stabilizing. You can take a look at the weekly, and you can see one of the reasons why we had a substantially, big size down week is because we went below RSI 50. Should we have a reversal back above RSI 50 in the new week, expect this to also give rise to a relatively big reversal to the upside. It's not necessarily the most bearish looking chart. Trading around the moving averages just means that it is sideways, net. Now, in terms of powerful moves to the upside, you can see there's some cap. As long as we have this topside resistance being a problem, then we can see that the Nifty is going to struggle. At some point in the future, a breakout above that line is needed to free the Nifty to go higher. Right now, I would say yes, down week, but is it broken? Not necessarily. If we take a quick look at the daily, we can see the daily is pretty much trading around and actually between an upward sloping 200-day moving average and a downward sloping 50-day moving average. So hence all this volatility, but net we are trading between the 50 and the 200-day moving average, which is pretty much a sign of a sideways market, just like we did here. Take a look at BTK, which turned positive and doing its best to hold. So as long as the biotech space is positive and holding above and staying positive for the month, this is good. As long as the monthly charts are positive. And the reason why the RSI could be stabilizing around here is because if you take a look at a multi-year long-term RSI trend line going back to 1994, believe it or not, something like that, you can see that this is an important area as far as the long-term monthly charts are concerned. If the BTK can hold this area, that is good enough to generate energy over a period of many months for it to coil higher. It's another way of saying that as long as the bear ETF, BIS, is failing to hold the breakout level that we were tracking, which is at 20.34, which is this monthly closing high, as long as it is struggling to hold above that breakout level, then this breakout for the BIS is not gonna be successful. In other words, we can continue watching this because should it recapture the level above 20.34, that will be bullish. So we keep watching it, but the more it fails to hold above this level, in other words, a failed breakout is a reason to get out of that breakout entry. If it moves back above 20.34, then we can either initiate fresh entries or continue holding our previous breakout level, which was this movement here. So anything above 20.34 remains bullish. Anything keeping it below 20.34 is a sign of an instrument that is struggling and needs to be sold. Alternatively, we can always use a 5 to 8% stop. A quick look at the other charts that we've been tracking over the last couple of weeks. We can see the financial space ETF still showing resistance, just like the NASDAQ, Dow, and S&P 500 on the monthly. We can see that the semiconductor index is doing its best breakout impression, currently holding above the prior monthly closing high here. Now the problem, as we noted last month, was the breakout quality is missing. RSI is not above 69.1 and RSI is not breaking out to 3-year highs. So the breakout does lack quality even as price is moving above the prior monthly closing high. What that suggests is the likelihood of failure is very high. You can take a look at IYR, which is, I would say, one of the best looking monthly charts. While it is holding above 69.1 on the monthly, this remains to be one of the leadership areas of the market. The solar space also, after pulling back last month, if it can clear the recent monthly closing high in price, that would be a bullish entry. If it can clear that previous monthly closing high from the month of July, that would be bullish. Actually, month of August. Why would it be bullish? Because price breakout would be moving the RSI to 3-year highs, and would also be moving the MACDs to 3-year highs. So a price breakout is needed, and that is why I am tracking that breakout level. So the MACDs are good. These MACDs meet the minimum requirements, no problem with the MACDs. RSI looks good. We just need a price breakout above this recent monthly closing high Again, this is a solar space ETF. And the price breakout is at 30.55. If it can clear that level, then the solar stocks are also going to be in play. Now, a quick look at gold. Now that it is positive for the month, let's just stick with the positive prospects here, and it is the recent monthly closing high we need to watch out for here, because movement above this price would actually be very bullish after one down month. So let me give you that buy point for GLD. It is 143.75. If gold can clear this level, that actually gives it the opportunity of moving the RSI above 69.1. That would be very bullish. We can see that the MACDs are trading at 3-year highs already. So actually, interestingly enough, it would just need a price breakout. Everything else would take care of itself. And this would be a quality move if it happens to break out. As far as the gold index proper is concerned, let me give you the price level to watch. Again, it's this recent monthly closing high. And the level to watch there, if it can break out, is 1529.40. And again, RSI and MACDs would be good. MACDs at 3-year highs, RSI would be moving above 69.1. We can also watch silver by way of the SLV, the ETF. And here the level to watch for a potential future breakout, if it breaks out, is at 17.15, the recent monthly closing high. And again, this would also, if it happens with a price breakout, be moving the RSI to 3-year highs, and we'll be moving the MACDs to 3-year highs, if not already at 3-year highs. So just needs a price breakout. So that's the level to watch. GDX. Also, let me give you the breakout level to watch here. It's a recent monthly closing high. And that level is at 29.86. And if it breaks out, MACDs and the RSI should be good. RSI would by then have coiled up and would be close to 3-year highs and also close to moving back above 69.1. So let's say if you don't have any positions, I would say wait for the breakout in one of these instruments, either GLD or GDX or SLV. A quick look at the dollar by way of UUP, and we can see UUP is coiling back below RSI 69.1. That's not the best look. So we can say net, the dollar is showing signs of moving lower as long as it is trading below 69.1 on the monthly. A quick example of UUP where it struggled at 69.1 is here, of that monthly closing high, here of this monthly closing high, and we seem to be doing the same thing here. So as long as it is below 69.1, we can assume that this is where we should anticipate the dollar to be struggling, and we can see we draw a line something like that. What this line gives us is a little bit of a different perspective with the same conclusion. For example, we have a break below the line here, resistance on the line, somewhere there. We break out above the line, break below the line here for this down period. We recapture the level above the line, break back below the line, and now we've been bumping with this resistance here. So as long as we are below the red line and as long as we are trading below RSI 69.1, I would say net, the dollar looks like it wants to pull back. Now we come to the USO, and this has been a sideways mess for many months. And believe it or not, we are still within this wedge. So again, this is one area of the market that I can say for sure it's very, very difficult for me to read. It's just been trading in this mess. And 1 minute it is shooting to the upside. The next minute it is collapsing. So I would just kind of not want to touch this based on the too unpredictability, the charts all over the place. And by the way, we are trading still within the wedge of the RSI. At some point, we would need to see some decisive move either above the breakout to begin a strong move higher, or a break of this trend line to really take things below current trading range, which is here on a weekly closing basis. So this one, tough to read, in my opinion. A quick look at Bitcoin. Trading currently at about 81.97. And the one thing I can say here is on the weekly chart, seems to be finding some footing. If you take this break point here and draw a line from there, something like that, we can see that this was a decisive break area, which is here. We recaptured this area, which is this entry here. So I would say that black line on the weekly could be offering it some stability. But as far as the daily is concerned, the daily continues to trade below RSI 30.9. And as long as that's the case, then we can see here that more than likely it should continue to trade in this range, and actually with a higher probability of breaking below that area, just because the more it stays below 30.9, the more it's going to have to continue trading sideways to down. And again, we can see that if you're looking for any reason to add or to build a position as far as the cryptos and Bitcoin in particular is concerned, I would go back again to this area where we see that there was a break. This trend line break here is what is currently being tested, in my opinion. Whoops. So as long as this is holding, then that remains to be positive. And by the way, this line actually was instrumental. If you go backwards, there's a massive entry here, strong entry somewhere here. It might not seem like much at the time, but if we go back to that area, you can see that Bitcoin was trading in the 300s. This is the area I'm talking about here, something like that right there. So as long as we are bouncing here, that might be where it stabilizes, but a break of that line could suggest much lower prices on a day-to-day basis. Watch that RSI 30.9. Anything that holds it below 30.9 would suggest continued downside pressure. Eric Moore with Mother.com. As always, good luck, peace, and blessings.